Gentlemen, welcome back to Help Coin, and pay close attention. I need you to focus on this one. When I say that today is the first time I've seen the market align in this precise manner in months, I mean it. I didn't read headlines or copy Twitter takes. Instead, I spent the last few hours conducting my own research. I mean actual due diligence. And that combination hasn't appeared once in this entire cycle. Based on what I'm seeing in the CME futures, bond market, cryptocurrency Twitter, and even the responses from analysts who typically act as though they know everything. And this setting is more important than you might imagine if you own XRP. This is the unvarnished truth. The market has been operating under the fanciful assumption that we will see two rate cuts, just two small 25 basis point cuts, for the past 3 or maybe 4 months. That has been the main story. Traders have been factoring that in. Analysts often stated that. To be honest, people become accustomed to it. Suddenly, however, the statistics reversed. CME just changed the odds once more. And the current trend is pause, which means no rate cut at all. Additionally, they flip constantly before anyone rolls their eyes and says, Jason, I want to remind you that this year, the CME has been frightfully accurate. At every conference, they have been ahead of the curve. Let me cut through it then. In the short run, it would not be positive if the FOMC decided to halt rather than cut when it met on December 9th. I am not here to tell you lies. It isn't encouraging for Bitcoin. For stocks, it is not bullish. Furthermore, it is unquestionably not optimistic for XRP in the near term. However, hardly nobody is engaging with this. The wildcard is QT expiring on December 1st. Under the hood, it component modifies the liquidity conditions. Why in the world is XRP flat, Jason, if you've been wondering? What is causing Bitcoin to become stuck? What is causing altcoins to act lifeless? That's just one side of the tale, but this is a portion of the solution. The situation with Bitcoin is the other side. The majority of retail traders are totally missing the plot at this point. Several times this cycle, Bitcoin has fallen about 30% after reaching significant highs. It's not arbitrary. It's more than just a market panic. It's structural. The market does this precisely before the subsequent leg. We are currently seated within the identical pattern once more. Additionally, many on cryptocurrency Twitter are going crazy, yelling that the cycle is finished, declaring a bear market and acting as if the world were ending. In the meantime, the chart is performing as intended. However, this is the unpleasant reality that most people would rather not hear. Altcoins have no voice if Bitcoin remains stagnant. We can spend all day discussing the usefulness of XRP. We can discuss collaborations. At the moment, macro pressure is the only thing that matters, but we may discuss the larger story. And when the October FOMC minutes are released next week, that pressure will only increase because those. The Fed's true mentality will be confirmed by the minutes. Pauses, cuts, QT projections, everything. Following that, the market will experience volatility reminiscent of early 2021. I want you to comprehend this. I'm taking my time with this video today. I'm not trying to hype you up. I'll give you the whole story. The traders ignore it because they're too busy chasing green candles, and the influencers ignore it because it's not glamorous enough. December will put conviction to the test more severely than anything else we've seen this year. The QT ending, the FOMC's uncertainty, the structural correction of Bitcoin, and the flatlining price of XRP are all contributing to a situation for which most people are utterly unprepared. Since the headlines don't tell you the whole story, let's now take a closer look at what's really going on. The information is becoming more and more obvious. This time, there was a noticeable flip in the CME futures market. As of right moment, there is an approximately 55% chance that there won't be a cut in December and about 44% chance that a cut of 25 basis points. In essence, the market is telling you that Powell won't be giving us a Christmas present. Additionally, the market acts differently when it has no expectations. It becomes more taut. It becomes defensive. Instead of preparing for opportunity, it begins to prepare for shock. This is where things become even more intriguing, though. The distribution is nearly identical when you compare the CME figures with what Poly Market is displaying. And it's no accident. Alignment is that. Additionally, whenever conventional, when prediction markets and futures data align within a few percentage points, it indicates that traders everywhere are witnessing the same storm developing. According to half of them, the Fed has finished its annual rate cuts. The other half believes that we are hardly able to make another cut. However, absolutely no one is pricing in anything more hopeful than that. You're already aware of what that implies. Because zero expectation equals maximum impact, markets will erupt if the Fed truly surprises them with a decrease. Let me now draw attention to something that individuals keep handy. Forgetting. The market was completely unaffected by the last two cuts. Do you recall that? Both times, I was live with you. Everyone was excited. We didn't get the fireworks that everyone was expecting. Why? As the cost of the reduction was already known. Traders were already set up. The shock factor was absent. However, the circumstances are different this time. The market isn't ready for a decrease in December. It's a blind side if we get one. And believe me, markets respond angrily to blind spots. QT, however, is the true elephant in the room. The fact that 10 of the 12 FOMC members are in favor of QT being maintained is significant. That lets you know where they're thinking. They have no intention of inflating asset values. Their goal is to maintain control. How strongly they intend to maintain high rates into Q1 is the only thing we don't yet know. The October minutes then become relevant. In roughly 5 days, those minutes drop. Additionally, they will reveal the truth about Powell's public press conference. Because these press conferences are, let's face it, public relations. You can see the unfiltered thoughts, anxieties, conflicts, and internal warnings in the minutes. Here's why this is such a crucial moment. Until we receive those minutes, the market is frozen. Everybody is waiting. Everybody is reconsidering their stances. And this is precisely the type of situation where abrupt changes occur because liquidity dries up while conviction breaks down. XRP's flat consolidation, pressure on Bitcoin sales, and stock declines. It's all connected to this precise uncertainty. The way macro traders are handling this climate is another issue that most people are overlooking. The bond market is behaving as though the Fed is not at all at ease. Yields are not moving. Investors are shifting to safer investments. Additionally, the dollar is displaying brief spikes in value that indicate one thing. No one thinks the Fed has finished psychologically tightening. The narrative tightening has not decreased at all, despite the policy tightening slowing down. Additionally, the overall macro setting has a direct impact on cryptocurrency, particularly XRP. Because XRP is no longer merely a pump and dump asset for speculation. It is linked to institutional behavior, expectations for liquidity, and general risk attitude. XRP freezes if macro freezes. XRP outruns all other currencies if macro loosens. That's the truth. Therefore, the primary development that you should focus on at this time is straightforward. The market's total lack of readiness for a surprise cut, the December pause narratives, the FOMC minutes, and the impact of QT on liquidity. The market is acting like it's just another week, but those four elements are going to clash. This is when things start to come together. Because you're missing half the story if you just look at the rate cuts and pause possibilities. Retail sentiment isn't the true leverage in this market at the moment. It's how Ripple fits into this, the liquidity flows, and the institutional positions. Worldwide change that isn't being seen by anyone outside of the cryptocurrency Twitter community. Let's examine how things function in the real world rather than the fantastical realm that users of TikTok